So September saw fairly flat global markets, although year on year we've seen quite strong returns. When you think about the composition of the markets, we saw defensive sectors such as telecommunications and utilities a little bit weaker, and we saw a rotation into more cyclical companies such as mining companies and energy companies. For fixed income markets, we did see slightly weaker markets across the globe. We saw a sell-off in bond yields during the month, but there was a recovery, and by the end of the month they were quite flat as well. So September brought to an end a decade under Glenn Stevens with regard to the Reserve Bank of Australia. His tenure was very strong with regard to the Australian economy though. We saw unemployment averaging 5.3% during his time and inflation 2.3% per annum. These are pretty good outcomes when you think about that time frame with regard to the global financial crisis, where a lot of major economies saw their unemployment rates really spike. So oil prices have been pretty volatile in the last 2 years. Since the highs in mid-2014, we've seen oil fall by about 75%. But in the last 12 months, we've seen a little bit more stability in the oil price, and it's risen from its lows. This stability is really important because people are concerned about global deflation, not inflation. And so a little bit more indication of some stronger prices would be positive to economic growth. Now that can flow onto the interest rate markets, where higher inflation can lead to higher interest rates. And that can be seen positively from a retiree's perspective as they draw income from their portfolio.